Hello everyone, my name is Ram Dhamija. Welcome to my channel. Today is 4th of December and it's the Sensex expiry Thursday. Markets are doing okay. They have been very volatile and there has been a lot of reasons actually why the volatility is there. The main couple of reasons, one is that there are two central bank meetings that are lined up. One is the RBI meeting result, which will come out tomorrow, and then the Fed meeting is there, which is I think next week. So these are the two big reasons why the world markets are kind of volatile, and so are our markets as well. And today especially the volatility has been very high. The third reason is being that there is something happening in Japan where the interest rates have actually gone up. And that is kind of unprecedented in the Japanese history. Why that is important is because, of course, there is something called as yen carry trade which happens. So people actually borrow in Japan at lower interest rates, and then they put that money in US in the world markets for an interest rate differential. Once that interest rate differential actually goes, then that money has to be wound up. So the so-called easy money, which was coming from Japan, kind of eases out, and that was bound to cause some pressure because Japanese, even if you see in terms of the treasury holdings, I think Japan is one of the highest treasury holder for US treasury. So even that is going to have an impact there. Apart from that, there are other lot of things that are happening. Gold and silver are continuing to put a pressure, and gold and silver actually are symptoms, not the reason. And what we are seeing is that the price of silver is now closer to $60 for a troy ounce. It has cooled off a bit today, but otherwise it had gone to 59. The another one major problem that is happening is the price of rupee versus the dollar. That is falling in a free fall, and it reached a high of 90.5 today, and from there it has cooled off a bit, but that is not a good sign. And till the time the rupee weakens, there is going to be a pressure both in terms of the FII outflow, one, and of course the long-term prospect of our currency. Actually, it's not good if the rupee depreciates so rapidly. If there is a gradual depreciation, 3 to 4%, then it is okay. But this year, the depreciation has been double of what usually is. So this year we have already depreciated by 6% plus against the US dollar, and that too in a year when US dollar actually hasn't appreciated against the other basket of currencies. It has actually depreciated. So US dollar index actually from 110 has come down to 97. Also it went, right now it's 99. But our currency, when US dollar was falling, our currency was falling against the US dollar. So that was something which is very peculiar. And somewhere, this is all tied up to the trade deal, which we are not able to get. So we are still the highest tariff country in the entire world, along with, I think, Brazil. So that is having major issues in terms of the currency as well as the markets. So markets, while you see markets right now at 26,000, 26,300, which looks like, optically it looks like an all-time high. But if you look at it in currency terms, we are much lower because we have depreciated 6%. If you look at it in terms of gold, it's a completely different argument altogether. However, having said that, we have to look forward, and tomorrow, if there's a rate cut, which if it comes at 0.25, then it should be okay. At least that is something that the markets will have something to cheer about. But if the rate cut also doesn't come, then we'll have to see what the reaction of the market is. So I'll take you through what the major signals of the market are today, and how I see the market moving forward in the next week. So let's begin today's video. Hi, as some of you would know, I am an AMFI registered mutual fund distributor. I help clients build very strong, robust mutual fund portfolios, which have a combination of market cap weighted mutual funds as well as factor based mutual funds, along with the international and gold diversification. So if anyone of you is interested in creating a strong, robust mutual fund portfolio, or even if you want to get your existing mutual fund portfolio evaluated free of cost, kindly fill up the Google form in the description below, and I shall get back to you. Now let's turn to the video. Let us first start off with the Nifty chart. Now this is the Nifty daily chart. As you can see that Nifty daily chart, as I said, we are in the range. We are making that zigzag pattern. So we made a high of 26,300, and then from there we cooled off to about 25,870 odd, and now we have gone up. So it's a zigzag pattern which will continue for some more time. This is basically classic consolidation pattern that is happening, and the markets are moving within that range. Nifty, if you see, intraday was slightly wild. So it, if you can see, after the morning open, it suddenly gapped up and it went up till about 1040. So it went to about 26,100. From there was a sharp fall, and Nifty corrected almost 200 points from there. And then it has just regained some lost ground with some 10-15 minutes to spare. If you look at Bank Nifty, the situation was pretty much similar. First up and then the big down move. And in terms of the Bank Nifty daily chart, as you can see over here, the Bank Nifty made an all-time high, much stronger than Nifty, made an all-time high on 1st of December. From there, it has cooled down a bit because there was some news of rejigging of Bank Nifty constituents, so to allow smaller banks to come in and increase the weightage, increase the number of stocks in Bank Nifty. So because of that, Bank Nifty has been falling a bit, and today it has just recovered. If you look at the open interest, that's slightly interesting. Today open interest is at 0.85 for Nifty. It started at about 0.6, 0.7 today. It went to about 1.05. Then it was looking all bullish, and from there the sell-off came, and then it was 1, and now we are below 1. So there is huge amount of call and put written at 26,000. At 26,000, in fact, the puts are more than the calls. They are actually evenly matched, if you ask me. And people are very confident of kind of protecting the upside. So you can see that there are about 16 crore calls versus 13 crore puts. So that is how the open interest is playing out. If you look at the FII shorts, so FIIs have been shorting. They built up their shorts. Now they're minus 1.13 lakh contract short, and you can see the Nifty movement also kind of matching with the FII short building positions. So as they have been increasing their shorts, Nifty has kind of precipitated slightly down. If you look at in terms of the straddle premiums for the day, the straddle premiums started at about 230 odd, and we haven't decayed much. We have decayed about 25 points, which is also decent if you ask me for a day like this, which is preceding one day preceding the RBI policy announcement. So we have decayed by about 25 points. We have about 200 points left now for how many days? For Friday, Monday, and Tuesday. 3 days, 200 points. On the expiry day, it's going to open at about 100, 110 for the straddle. So it's okay. It's a normal par for the course. If something unexpected doesn't come out of RBI, or if there's no huge sell-off tomorrow, then we should be okay. 200 points for 3 days is fine. It's not a big plus or minus, if you ask me. Now coming to the other things, this is the international cues. This is the most important part, which is determining the direction of the market. So if you see over here, S&P, Nasdaq, Dow all have recovered a bit after some beating that they took last week. And US 30 years, 10 years are absolutely fine. So US yields are fine. Japanese yield is what the problem is. In terms of the USD INR today, after hitting 90.560, as you can see the high, it has cooled off a bit and it is at 90.03, which is good. Brent is well behaved at 62, so there is no problem over there. Gold and silver corrected a bit today, but what can you call this? This is hardly a correction. Silver is still at 57. And one interesting thing is that silver backwardation is finished. So this silver is the future, 57.84. 57.38 is the physical price. So now it has actually gone into Contango. Contango is a word in which is basically used when your futures are priced higher than the spot, and that is how it should be, because there is a carrying cost, there's an insurance cost, etc. for silver. So silver is at least the backwardation is kind of over after 6 weeks. So let's see for how long does this last. Bitcoin world, Bitcoin is now at 93,000 after falling to a low of 80,000. It has recovered 13,000 points, $13,000. So Bitcoin is in its world of its own. It's at 93,000. So this is basically the chart of USD INR. As you can see over here, USD last one day is basically minus 1.14, which is kind of flat. But last week it has lost 0.75%. Last 1 month, 1.5%. And these percentage moves in the currency, like 1% and all, are very, very significant. They are not small moves, because the currency doesn't move in percentage points. It moves actually in basis points. So if you see the contracts now, that derivatives is no longer open currency trading, but otherwise if you saw the contracts, they were in multiples of 0.05, 0.005. So even such small movements in currencies actually create a lot of disturbances. And the movement in rupee actually happened in two quick bursts. On one day I think we lost about 70 paisa, and then the next day another, a day after that about 30-40 paisa. So within like 2 days, from about 88 point something, we were at close to 90, and then we crossed 90, of course. So that is how the rapid the movement of the rupee has been. And RBI also will be constrained, because I'll take you through what the consensus view is. So if you see over here, RBI monetary policy, rupee slump complicates paths to an RBI repo cut, because of course if RBI cuts rates, rupees as it is weak. And so over here what it is written is, this is a HT report. It says a majority of the 44 economists surveyed by Bloomberg expect the RBI to cut its benchmark repo rate by a quarter point to 5.25 on Friday. Given inflation is well below 4% target, inflation actually is 0.5%. So with the economy expanding at a rapid clip and rupee dropping to a record low below the 90, there are plenty of reasons for the RBI to pause as well. So RBI is in a tough spot. What should they do? But if you ask me, then I would say that a rate cut is in order, because at least it spurs consumption, it spurs the economy a bit. Keeping the rates high just to protect the rupee, I don't know whether that will work out or not. The problem is somewhere else, in the rupee going down, not in the rate. So and Fed is also going to cut the rate. So maybe we might see a rate cut tomorrow. Who knows? Let's see how the implication is for that going ahead tomorrow. So lots of things to look forward to tomorrow. Today was a okay day. There was Sensex expiry, and there have been a lot of wild movements in Sensex options. So I have kind of stopped trading it now. I just probably take some OTM options if there is some spare cash lying on. But even within those, we have seen how things have been playing out on Sensex options. So it is it's a avoid for me. But today was that. And otherwise markets have been okay. They have been under some sort of a pressure, but within a range. So let's see how things, tomorrow is going to be important. Tomorrow might just decide the near term direction. So let's see how things play out, and I shall keep you updated. I'm going to do a detailed video over the weekend, so do watch out for that. And do subscribe to the channel. And I think that's it from me now. If you like the video, please do like, share and subscribe, and I shall see you soon with another update. Till then, take care. Bye bye.